How do you see today shaping up? What is your WEX word of the day?
Yeah, our WEX word of the day is breadth. We've really seen that the markets have come off of their lows in early August. And a lot of that is really due to the fact that we're shaking off any of the nervousness with the economy maybe going into recession. The economy's continued to show it's on good footing. You're seeing more than three 80% up days in NASDAQ 100 and NASDAQ stocks. But on top of that, you're seeing that we're having higher advanced decline lines in both the S&P 500 and the NASDAQ 100. And you're just seeing the broader markets doing well, meaning breadth. And that's a much better sign that you can continue to see this momentum going forward. I think that's what you're going to want to see is not just 7 companies doing well, the entire stock market is doing well. I think that's what you're going to continue to see here.
All right, so I think you and I are in agreement. We are seeing a huge move when it comes to momentum. It's been a big momentum trade. At the same time, it's been really low volume. Just for example, there's just not anecdotal, but yesterday we saw the S&P and the Triple Q both traded about half of their 30-day moving average when it comes to volume, just a low volume period. Do you feel like you can trust this momentum trade right now, considering that it's not a lot of people participating?
Yeah, August is typically a low volume month, so I don't think that's anything to be concerned about. Well, we could say this every August. But I would actually point to the fact that all of the data has continued to support the momentum, right? I mean, if there was nothing to support it, it's purely on low volume. That could be more of a concern. But I think in early August, when you had that unemployment tick up to 4.3%, everybody's saying, uh-oh, are we going into recession? But you've continued to get data showing that, A, that was probably an anomaly, B, that was probably more so due to people entering the labor market as opposed to layoffs happening, which would have been worse news. And probably a lot of that was more just due to the yen carry trade unwinding, which is just more of like a technical factor, so to speak, as opposed to data showing we're going to recession. Like that would be a concern. We're not seeing that. So yes, it's low volume, but as long as the data supports it and is leading to a more and more likelihood that the Fed is going to lower interest rates next month, which again is going to be supportive for the markets, all of that leads me to believe that yes, it's something you can trust.
All right, so you're mentioning the Fed. We get Fed minutes later today. We obviously have Jackson Hole this week. We're going to hear from Jay Powell. In the in-between time, how do you see the markets reacting between, backwards-looking Fed minutes, and obviously we're expecting Jay Powell to give us some insight leading into September's meeting?
Yeah, and that's right. I think the Fed minutes are less important than what Powell is going to be saying going forward. So I think all ears are going to be what he's saying on Friday. But I think really up until we actually see what their policy is going to be in September, you're going to see kind of some sideways trading here. But markets are really pricing in a cut. The question is going to be how big the cut is and what's happening moving forward. So at this point, it's pretty widely expected that rates are coming down this year. The question is, how much further are they going to come down? And I think as an investor, you do want to be prepared for the possibility that rates may come down here, but they very likely could stay at higher rates than they have been over the last decade. I mean, I don't think we're going back down to the low levels that we had been at. So I think you want to make sure you're well positioned for cuts to happen in the short term, but rates may stay longer relative to where they were.
All right, may stay longer relative, but we are expecting a cut coming up. I want to get to your picks. One of them I thought was really interesting. Vistra Energy shares have pretty much doubled year to date. Why are you feeling so much confidence in this name? Do the Fed cuts play a factor?
Energy in general, it's going to be one of these kind of all hands on deck names where the entire energy sector is really having this huge supply demand constraint. And especially this is exacerbated with artificial intelligence, where there's really not enough energy on the grid to get artificial intelligence to where we want it to be. And that's where you're going to see these names really continue to do well. And that pressure is not going away anytime in the near future. So there's a lot of different names we like here, but I don't think anything in that energy trade is going away. And it's absolutely something you want to play for the long run.